NAB is hiking interest rates. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and I'd like to have a look at this article from Yahoo Finance. It's discussing how the National Australia Bank is hiking mortgage rates. They've joined CBA, ANZ and Westpac. Now I can't imagine anyone is at all surprised with this. Now, for those of you that haven't been watching, the cash rate is sitting at 0.1%. Now, I purposely haven't changed this chart for some time to see how long I can milk it, but we'll have to see. Now, the predictions from the RBA rate tracker from the ASX, right now, 28th of October, so yesterday, the prediction is that a decrease to 0.0% is 75%. And no change is 25%. The RBA have said they're not going to increase the cash rate for some years, but, well, the bond and maybe the market may force their hand. And nevertheless, the banks are increasing rates. So, Australia's third largest bank, NAB, has made sweeping changes to its home loan rates, the majority of which are hikes. This move means all four banks have increased the number of fixed rates within 2 weeks. However, NAB also cut its base variable 1 year fixed rates today, bringing them in line with Australia's largest bank, CBA. They're trying to compete to still have an attractive offer to get people in the pipeline. So, the NAB variable rate change for owner-occupiers. NAB cut its lowest variable rate by 0.4% to 2.29% today for owner-occupiers paying principal and interest. NAB is the last of the big four banks to reset its mortgage rates within 2 weeks. RateCity.com.au Research Director Sally Tyndall said. NAB's rate changes are uncannily similar to CBA's, with the bank hiking the majority of its fixed rates, but sharpening its base variable and 1 year rate. So these are the ones, the 1 year, they'll take a hit to get you in. But the fixed ones, well, they're going up. I guess people are concerned with the uncertainty too. Tyndall said, with COVID-19 restrictions easing and vaccination rates steadily rising, the banks believe the economy would rebound quickly and were factoring in an increased cost of funding. While fixed rates are on the rise, the banks are moving in unison because the last thing they want to do is lose business to a rival, she said. The big four banks have strategically made their 1 year fixed rates start with a 1, which might help with marketing, but it won't give customers looking for protection against rate rises much certainty. I mean, there you go. So here's the above rates for owner-occupiers. NAB also slashed its base variable rate for owner-occupiers down to a competitive 2.29 to keep in line with CBA and Westpac, who had both previously sharpened these rates. ANZ's base variable rate is now sticking out like a sore thumb at an inflated 2.72%. While banks are largely hiking fixed rates, there are still plenty of competition across the market with 145 fixed rates above 2%. But these aren't all likely to hang around until 2022, Tyndall said. So let's play with some Excel, guys. We'll bring up Excel here. And what are we looking at here? We've got, say, the 4 year fixed rate has gone from, well, what's the most dramatic move we see here? 5 year, 2.7, hang on, we're going for 2.79% to 2.99%. Now, if we're suggesting 400 grand mortgage, 30 year terms, just monthly repayments, nothing else, that increase for their 5 year fixed rate is equivalent to $42.81 a month in additional repayments. Now, that's about a 2.61% increase in that cost. Now, I'm going to bring up some other charts here just to show you, everyone. This is looking at housing, home loan prepayments, everyone. This one is showing us the liquidity buffers that households have, renters, indebted homeowners, and outright homeowners. So, should we be worried? We're talking about a $40 increase, and it's steadily creeping up, but we're also seeing inflation creeping up. You know, $40 now doesn't buy you as much petrol as it used to. And if we have a look here, what else? We'll go from 1.99 1.99 to 2.09. Everything else being equal, we are seeing a $20 increase in your mortgage repayments. So, I mean, these are not I wouldn't call them significant amounts of money, but it adds up. $20 here, $40 here, $50 here. It makes a difference to your monthly planning. If you chucked an extra $20 off a mortgage, every week, all of a sudden that's a significant amount at the end of the month. That's $80. That can add up, particularly if you've got a $400,000 mortgage. You've got to look at these things. For some people, this won't make a difference at all. For others, it will. Here we go, 2.18 to 2.28. Again, $20 difference. And then what we'll do is we'll look at the final one, 2.49 to 2.59. It'll be the same. 2.59. Now we're looking at here monthly repayments of $1,500 to $1,600. Money is still very cheap. I can't see this impacting a lot of people. I can't see this starting to knock over the market. Now, another thing we need to realize, it may cool off housing a little bit, but let's look at some property prices here. Now, I haven't updated this chart for Sydney. Well, no. Yesterday I was talking about Sydney prices, and the SQM data's updated. It looks like they're close to $1.5 million, everyone. But if we look at here, we're seeing, all houses in Australia, 1.1 million. That's all the capital cities. We bring the national, including the regions, 3-bedders we're looking at. We'll reload this. We're looking at sitting at 722,000. Look at that climb. Look at that climb. So if interest rates cool off a little bit, start going up, take the top off the housing, I can't see us having a big correction, but I can see maybe the climb not growing as hyperbolic. And one last thing I'll remind everyone of, the difference in disposable income for different households in Australia. Top, over $2,000. Middle, 930, roundabout. Lowest, 400. So this may not seem like a lot to some people, but to others it may just be enough. And what they'll do is they will cut other expenses to keep going. That combined with inflation and wage growth non-existent, yeah, fantastic. Anyway, guys, let me know your thoughts and opinions on this one. Do you think it's going to be, a big issue? Will it play out to your ability to service your mortgage, or are you already debt-free? Now, if you enjoyed this video, I want to point you to the last one I did about the exact same thing. Another one of the big 4 banks increasing their rates. Remember, this is slowly creeping up. Slowly creeping up, so it's not going to be dramatic. Property doesn't move as fast as crypto. Let's wait and see. Take care. I'll see you next time.